Hello, everyone. Welcome to our webinar, The CARES Act, What You Need to Know. My name is Rachel Gustafson, and I am a certified financial planner with Financial Investment Team. This photo here is our team. I am the second one in from the left. We are a woman-owned and run firm that specializes in holistic financial planning and financial education. So we normally offer monthly in-person seminars and classes on various financial education topics such as budgeting, social security, retirement planning, relevant information that we want you to know about so that you can make more informed decisions. Due to the coronavirus and social distancing, we have moved our offerings to a virtual setting, and we're embracing the world we live in right now. So my goal is always to inform and educate you so that you can understand how critical financial planning topics affect you and your family. Today's topic, of course, is the CARES Act and some of the changes that it brings. There's been a lot of information put out in the media, and we thought it would be helpful to outline the highlights. If you have additional questions regarding the CARES Act and how it affects your personal situation, we will be offering complimentary virtual check-ins following the webinar. I do want to mention I am a financial planner. I do not provide tax advice. We have a CPA on our team to provide advice to our clients. This webinar is meant to be educational. I will point out that I encourage you to speak to your tax advisor or CPA about your personal tax situation. So we're going to start with retirement changes. Required minimum distributions, or RMDs, are not required in 2020. And the rationale behind no RMDs in 2020 is partly because they were based off of year-end 2019 balances. Current account balances are a lot lower this year due to the markets in the wake of the coronavirus. And required minimum distributions, that is the IRS's way of getting the taxes that they're owed, right? So when you turn 72, you are normally required to take minimum distributions from your retirement accounts that are pre-tax. For 2020, they are not required. There's also been extension of loans from a qualified plan. So most 401k plans, 403b plans, they allow you to take loans from them. The maximum is normally 50,000, and that's been doubled to 100,000. So if this is something that you're interested in looking into, I encourage you to check with your 401k plan provider to determine what your options are. Generally speaking, you have 5 years to repay the loan and you'll pay interest. You're usually paying that interest to yourself. It's a way to make up for the fact that you've taken those funds out of the market. So I do encourage you to check with your 401k provider to see exactly what your options are, as every plan is a little bit different. Now, what I had just spoke about in the last slide was loans from your 401k or 403b or retirement plan that you're going to take from. Right now, I'm talking about the potential to withdraw up to 100,000 from your retirement account as a distribution. So you have up to 3 years to pay it back, and it's going to be tax and penalty free. No withholding is required on the distribution. Normally there's a 20% withholding that the provider will have to withhold. Distributions must be made between March 27th, 2020 and December 31st of 2020. So you're taking a distribution, you're having about 3 years to pay it back. If you decide that you do not want to pay it back, you can actually repay the taxes that will be owed on it over a 3-year period instead of one. Again, I encourage you to speak with your retirement plan provider to see how this looks with them and what those options are. To qualify for this, the recipient must have been diagnosed with COVID-19 or have a spouse or dependent who was diagnosed with COVID-19, or have experienced adverse financial consequences as a result of being quarantined, laid off, hours were reduced, or being unable to work because of a sick family member. So this is due to a COVID-19 reasoning behind it. Federal student loans. So under the CARES Act, payment on federal student loans, this includes direct loans, Perkins loans, federal family education loans owned by the U.S. Department of Education. They're automatically suspended through September 30th of 2020. That means eligible federal loan borrowers do not have to make payments. While the loan payments are suspended, interest will not accrue. If for any reason your student loans have not been suspended and you think that they should have, reach out to your loan provider to see what your options are and if potentially a mistake has been made or potentially your loans are not eligible, but you need to reach out to your loan provider. Stimulus checks. So many have already started to see the stimulus checks coming in. A quick note, those who file as head of household must make $112,500 or less to receive the full benefit. If you make $75,000 or less annually, you'll receive a check for $1,200. If you're between $75,000 and $99,000 and you're a single filer, it will be a reduced amount that you'll receive. Couples who make $150,000 or less annually will receive $2,400. And again, if you're between $150,000 and $198,000 for couples filing jointly, then you'll receive a reduced amount. You receive an additional $500 for every child in your household who is 16 or younger. And if you haven't submitted your 2019 tax return yet, it will be based, the income will be based on your 2018 return. If you used direct deposit function the last time you filed your taxes, the IRS will use that account to deposit the funds into. And if you didn't utilize the direct deposit function, the U.S. Treasury Department has launched a web portal where you can go and provide your banking information so that they can send the payments directly to you. So if you haven't received your stimulus check and you should have, then I would go to irs.gov and either put in your payment information or see where the delay may have been. Quick note, you do have to have a valid social security number to receive the benefit, and the amount, like I mentioned before, you receive will be based on your most recently filed tax return. Unemployment. So there are two parts to the unemployment. The first part is the benefit amount that's allowed in your state. The formula used to calculate this amount, it varies by state, as does the maximum weekly benefit. So your benefit depends on the state in which you live in. On top of that, there has been expanded unemployment benefits through the state. Specifically, the CARES Act allows employees to collect up to $600 per week on top of the financial assistance the state provides. So this includes part-time and self-employed workers, including contractors and gig workers. But I will say we've seen quite a delay on this. In Oregon specifically, since March, we've had over 300,000 Oregonians file initial unemployment claims. So the state's employment department has not been able to deliver on the federal government's promise of the additional 600. Its data shows that it's only been able to process about 64% of the unemployment claims it's received since March 11. So in short, the unemployment system is overwhelmed with all of the new applications. I like to think of it like taking an LA freeway full of cars and redirecting those cars to a small country road. They're simply gridlocked. So if you have applied, expect a delay in receiving your benefits, continue going in and claiming weekly, even if you run into errors, keep going in. because the plan is that they are going to retroactively go back and pay out what the unemployment is owed. So I do recommend in the meantime, revisiting your budget, reducing expenses as much as possible. We have a webinar, Budgeting 101. It's on our website, a great resource to get started. A couple of other provisions: individuals can make a charitable contribution of $300 and use the standard deduction. Taxes are due July 15th. Every state is a little bit different, so you do need to check with your state, but for the state of Oregon, taxes are due July 15th as well. So some additional time to file your taxes. Some business changes. So no estimated federal tax is due until October 15th, 2020. And just quickly, I'm not going to go into great detail here because things have been changing daily and even weekly. I'm just going to go over the highlights as of today as we know them. Deferral of employer portion of Social Security Medicare tax from enactment of January 1st, 2021. And I want to highlight here, it is a deferral, so they will be owed later. Check the IRS website if you want to get more details or talk to your CPA or tax advisor. Payroll Protection Program allows businesses to borrow up to $10 million in loans that are 100% forgivable if you do not lay off any employees or if you rehire employees that you've already laid off. And what I will say about the Payroll Protection Program is businesses are starting to see those funds come in. And each state is allocated its own funding through this. We're still unsure of exactly what that looks like, but funds are limited. The Economic Injury Disaster Loan allows businesses to borrow up to $2 million in loans and includes a grant of up to $10,000. So what I would like to mention here is contact your banking partner if you want to apply for the loan. While the SBA is administering these loans, they will be serviced by the banks. Excuse me. They will be serviced by banks, credit unions, and SBA approved lenders. Each lender is prioritizing by their current customers. So you do need to have a relationship with the bank in order to submit an application. So start with where your business accounts are currently held and see what your options are and go from there. If you have additional questions on the business changes, schedule a time to chat with us and we can give you some more detail and have it be more timely. Okay, so those are just some of the highlights. Where do you go from here? Stay informed. Follow us on Facebook, keep up to date with our website and our latest webinars, seminars, and articles. We are doing our best to keeping our clients in the community up to date on what's happening. And like I said before, it's an ever-changing landscape, and so it can change daily. Even from when you view this webinar, things could have changed. So reach out to us. Schedule a financial check-in, review your budget. We have a webinar, Budgeting 101. Check that out. We are living in very strange and uncertain times. Having a plan can really give you peace of mind and help you prepare for the unexpected. So please schedule a check-in with us and we'll be happy to answer any additional questions you have. And thank you for being with us today. Hopefully you got some very helpful information. Look forward to chatting soon.